Now, when it comes to assets, we know that certain assets do better in liquidity environments. So European equities have never been great because there's not a lot of investors left in Europe. I mean, the average person, even their pension funds, tend to own more bonds than they own equities. So it's not a big investing culture, stock market culture.
Yeah.
But the US is. What we find is that, generally speaking, the S&P 500 does pretty well. Technology stocks, gold does okay. Technology stocks do really well, and crypto does ridiculously well. And why is that? It's because really economic growth is not high enough to sustain ongoing high equity prices, which is what's happened in Europe. In the US, it's optically looks like they're going higher, but it's actually to do with the reserve currency of the world being debased.
Yeah.
So when you divide the S&P by the Fed balance sheet, it's gone nowhere. It looks like the European stock market. It's gone nowhere in 20 years. But crypto and technology do beat that debasement of currency, and it's because they're secular trends driven by adoption of technologies. So they have a tailwind, while everything else is driven by an aging population that's massively in debt, and an economy that's slow.
Bitcoin faced selling pressure in the week, ended April 23rd, as bond yields rose and the US dollar liquidity declined. The leading cryptocurrency by market value fell by 9% to $27,600, registering its largest single-week percentage loss since early November, according to data from TradingView and CoinDesk. The yield on the 10-year U.S. Treasury note rose by 6 basis points to 3.58%, its second straight weekly gain, denting the appeal of risk assets, including cryptocurrencies. Hello and welcome to Money Talks. In today's video, Raoul shares with us his outlook on the future of crypto markets and his view on regulations for Bitcoin.
What is our job as investors? What are we trying to do? We're trying to deliver to ourselves that vision of our future, right? Investing is about buying assets that you can sell later, so your future self is wealthier, better off, right? And we all have this. We have this vision of where we could be in 20 years' time. And it kind of drives us as humans. So therefore, assets at the end, that 20-year period or however long, or your trading, your investment, need to be worth more in purchasing power terms.
Yeah, of course.
Now, the problem is if you forget about the Fed balance sheet, it looks like your investments have gone up. But when you try and buy another asset, you've made no grounds. Which is why crypto is so powerful, because it has a very different return profile. When you step back, crypto people think it's all about crypto and its regulators and its FTX. It's not, none of that. Liquidity was taken out of the system.
Yeah.
And we've got the asset that moves most according to liquidity. So when liquidity comes out, it falls a lot. When liquidity comes in, it rises even more because there's a secular uptrend. So how I look at crypto is, if you take the log chart of crypto, Bitcoin, which everybody's looking at,
we know it, yeah.
You use that, and it goes in these big cycles. And those big cycles are the monetary cycles, liquidity cycles. But it's still always going up. While if you look at S&P and stuff like that, they don't really do as much of that. So that's the simple way of thinking about it.
The correlation between Bitcoin, BTC, and Ether, ETH returns, has been declining since mid-March, when BTC started outperforming against the backdrop of the U.S. banking turmoil and increased regulatory scrutiny of non-Bitcoin digital assets. Coinbase, said in a research report Friday. The decline in the relationship has become more pronounced following the Ethereum blockchain's Shanghai upgrade, aka Shapella, the report said, noting that a similar trend was seen in September 2022 following the network's previous update, the merge. The Shanghai upgrade was successfully completed on April 12th and enables validators to withdraw staked Ether. The relevance of this falling correlation for institutional investors is that it can affect quantitative strategies that rely on cross-hedging one asset for the other, or using ETH as a hedge for less liquid altcoins. Analysts David Duong and Brian Kubelis wrote,
Cryptocurrency has gone from, when I first started looking at, maybe a few million people using it. So now there's 300 million active addresses. Okay, and the next time we get to the next cycle, there'll be 1 billion. And so that scale of adoption and all the applications being built on it just means it goes up in price a lot. Because this is the network of money and value. I mean, that's the, what is the total addressable market size of that? We don't know, but if I look at all other asset classes globally, they're worth 100 to 200 trillion. So what is crypto worth in 20 years' time? 100 trillion?
Yeah.
Sure. So Bitcoin itself, is that pristine asset that nobody can mess with, but it's useless as a transactional currency. Now, you can use the Lightning Network, which is using the chain itself, but Bitcoin itself is not a transactional currency. So what is it? Well, it feels like it's a decent reserve currency. If you think of what happened to Russia, they got shut out of the global financial system.
Yeah.
Now, every nation understands what that means is if you upset the United States, then you get shut out of the global financial system. So everybody's incentivized to hold other assets. So gold has always been the traditional one, but it's very difficult for central banks to send gold around the world. But Bitcoin seems a reasonable way of storing value. Now, it's very volatile, so that is the problem. So you can't have a lot of it because it goes up and down too much. Bankrupt countries if you're not careful. But as a reserve asset, I think the sovereign wealth funds will be particularly interested. I think the Middle East, we've seen a lot of interest there because they understand the game as well, as the Middle East doesn't want to be beholden just to the United States or China or anybody else. So the best way is have some monetary independence. Right now, all of their currencies are pegged to the US dollars. They're one of the largest owners of US Treasury bonds. And in exchange, the US gives them fighter planes. And, there's this whole petrodollar system that's built around it. And we all know, and particularly you're in Europe, that the use of fossil fuels is going to decline because it's been mandated almost globally. So in which case, places like Saudi Arabia, Abu Dhabi realize that, okay, they need to now think about this future where oil is not the only outcome. So i.e. they don't have all the cash flows. So they need to rebuild an economy and rebuild what they save. And so that's what I think the best use of Bitcoin remains, is like a reserve asset. But Ethereum has got my attention more from that perspective. And that,
I like that.
well, because it has a yield.
Yeah, and indeed. Yeah.
And if you go to any pension fund in Belgium and say, you can have this asset that doesn't pay you a yield, or you can have an asset that performs better than Bitcoin and has a yield, most people will choose it.
So, is it a good time to invest in Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.